People haven't arrived yet, but it's okay. So
where do you want? Wherever you want.
Yeah. So you can. Okay. So welcome to. It's a pretty serious job, but these two CEOs, not only they are handsome, they are super fun. So basically how the seminar we're going to run like this, but we're going to quickly introduce Ricca.
Hello, Andy. Thank you. Say something about it.
But First International American Bank is a great community bank here. But we get to more later on the mortgage session. And then the second session will be the insurance, the Aegis insurance. Educational real estate tourism program just finished in April. That weekly program that we both yeah, so okay, so either you could have a say we can start with the mortgage first. Do the glass one? The glass one?
Okay.
Okay, great. So can everybody see me from the back? You can? Yeah? Good? So thank you so much. And recognize here are some also CEOs and also many amazing professionals. And so basically, like this is our third time, and the reason that Jade Stone want to do this, the public seminar, free seminar, kind of once a month. Actually, it is once a month. It's because of one. I mentioned I shared with our guests last month that there are 30 days in a month, and then I pick one day a month to just share our knowledge and the resource with. So therefore, everybody can enrich each other in a faster, more efficient, more effective way. So I want you. Some of you don't know me, and I. Ready? Okay, great. Because we also have people watching it from live broadcast, and in the later we also share the video as well. So my name is Chen. I'm a real estate broker. Jade Stone Real Estate is. We mainly provide niche service quality professional service to service our Chinese and Asian community locally overseas. So we service a lot of the clients here and also from China almost every day. And we do residential, commercial, and also property management service as well. And so I love to my to industry or in life as well. So, and I like to do everything in a fun way. So, if you ever come to my party, oh,
Thank you, Andy.
also so much fun. So I'm going to kind of chase. So, can you just introduce us about briefly about the bank?
I hope you enjoy this as much as we are going to enjoy it. And if not, then just tell me and we'll see what we can do after the party. Years old. And we were founded with the dream of helping Chinese American immigrants coming to the United States. And we have continued with that dream today. First American is the largest Chinese American community bank in New York City, and it's the very successful bank, which is so awesome, so exciting. We have branches in the China. We focus on the Chinese American communities in Manhattan, Chinatown, in Queens, in Flushing, and Elmhurst, and in Brooklyn, in Sunset Park, Bensonhurst, and the areas around that. We are a community bank, so our focus is mostly on the consumer. We also do commercial lending. So with respect to commercial real estate loans, we do multifamily, mixed use, pure commercial properties. Again, mainly in our area where we can build solid customer relationships. And those loans are 5. We were talking earlier about one of the products that we do is we do help people rehabilitate their properties. So they may come in with a debt service coverage ratio, which we'll talk in a minute, of 1-to-1 or below 1, and we're okay with that as long as they can show us how they can get to a 125, 130 debt service coverage ratio.
You just finished my entire content.
Oh. Go ahead.
Okay. Good?
Good.
Okay, I have to cut it anyhow. Okay, so. Sorry, I have to interrupt Mark. I want to leave some for later.
Okay.
Good?
Okay, can I come to the microphone?
Yeah.
It goes on and off. They'll talk and then they'll cut out. You see?
Is it okay? Yes? Yes. Okay, great. So only these words? Okay. So I just need to rotate it. So we could enter the morning session, and sorry I have to interrupt. Mark?
Yes.
Yeah. Okay.
Okay.
So can I quickly ask that how many of you here have taken mortgage before? Okay. And the others have not? Okay. So we're going to pretty much cover from the beginning, the initial concept to maybe deeper concept. And how it runs is that I will raise some questions that most buyers they would like to know, and then to the Q&A session that you can ask Mark or Ivan in his insurance session. And we're going to have similar. We cover residential part and commercial part. So in the first part, we will do the residential. So since we have so many, I think we have mostly a first time, probably we'll consider first time that loan borrower, and some really seasoned even developer here. So can you share us right now how is our mortgage involvement in the rate and trend and in terms of historical points?
Sure, gladly. So throughout history, the mortgage rates going back to early 1900s were generally between 4 and 5%. In the 70s, they were up around 6%. In the 80s, they got as high as 16+%. And then they've steadily been coming down. We did dip very low. Now our mortgage rates are still below 5%. So it's a very favorable market from a borrowing perspective. And when the rates I'm talking about are for a 30-year fixed rate loan. So it's a very favorable American bank in this community. This community is awesome. It is a true community that you don't find on Long Island like you do here. I've worked on banks in Long Island. I've traveled around the country with different companies. And I've worked up in Harlem. And this community is awesome, so I love it. It's embraced me, it's accepted me, and it's a family atmosphere. So and being a CEO is also an awesome thing. As you know, any business owner, you get to set the pace, the direction, the ethics of the organization. Our first core value is ethics. High ethics is our first core value. And that leads into everything. So it's a wonderful, wonderful blessing.
Okay, wonderful. So while actually on the first question, how should the bank look at the borrower's qualification? He gave a really, answer in depth. And then so we talk about the credit, right, and the debt income ratio, the loan to value ratio, and the employment. That we know that you need to prove your income. So many borrowers, the question is that we know that New York City is a city, international city where people come from so many different places with a lot of money in the pocket. They don't even need to work, right? So can you talk about that people who do not have job, but they have income, right? How do banks look at those? And also from there, you could tell us about the retired. Because a lot of people who are retired, they want to purchase a home. However, they are concerned about they may not be able to get a loan. Could you explain that? Thank you.
Yep. Sure, thank you. Yeah, so income can come from many sources. It does not have to be a steady job. That's the norm where people have a steady job. But if you have investments that are reliable and repeatable earnings, that will qualify. If you're retired and have retirement income, that will qualify. So it still looks at the cash flow. The first two products I talked about look at the cash flow of the individual. The third product, that's asset verification, doesn't look at any of that. The majority of loans, the great majority, look at cash flow. Whether it's retirement, you get a pension, and you have stocks that are giving you dividends, those types. So it's okay not to have a job if you have other sources of income.
Okay. And so for the retiree, right, would the pension or Social Security considered as part of income?
Yes.
Yeah?
Yes.
Great. And so now I'm going to talk about what are the elements the bank look at the properties. A lot of, so you look down, there are so many like rental buildings, right? And then there are co-op and rental building. We'll talk about the commercial property later. And we'll talk about, let's focus on the co-op and condo right now, and then later on we'll ease into the family, the opposite single family house. So what kind of criteria do lenders look at when they evaluate the co-op condo that you're buying?
Sure, gladly, sure. So legally, a co-op is a very different animal with very different structure than a condo or a house. A condo is really like a house. It's real estate in the sky, whereas a co-op, you lease your property. It's an association that owns the building, and you're a tenant and you're an owner. So in co-ops, and with condos so much, but the co-ops are one of the more difficult ones to underwrite for a bank to approve. The bank's got to make sure that the financial stability of the co-op corporation is solid. Co-op corporation, because it's a corporation that owns a building, they have their own ability, independent of us, of the lender or of the co-op tenant, to get a loan, a mortgage that overshadows the property. And every tenant in that building then has to pay that mortgage, plus pay us. So we get nervous. We want to make sure that the co-op is being run prudently, and that they can afford to pay their mortgage, their debts, and then not overcharge the tenants. Because anytime something goes wrong, the tenant's rent can go up. And so you look at the length of time. There's something called a sponsor. We want small sponsor ownership, because co-ops, it's a building that was a rent-stabilized building that converts to a co-op. The rent-stabilized tenants are still there. So they may be paying $100 a month, but the maintenance on that unit may be $400. Well, the owner then has to pay the difference out of pocket every month to keep that going. So we want to make sure that the owners aren't underwater on that. So that's a co-op. It's a much more detailed process to go through. A condo is much simpler, because a condo can't put a mortgage or lien that's going to be ahead of the lender like a co-op. And there are certain charges, but they're called common charges, and they're much, much smaller. So condos are a much easier thing to make the loan on. In either situation, you want to make sure that the building has, say, more than 20% sales. You don't want to go into a building that's empty and then no one else moved in, and then the bank can't resell it because no one's moving into that property. So there is a tipping point that's a little difficult to get condos and co-ops going. Most of them make it. Once you're there, then a bank can go in. The banks also look at concentration risk. If the building, say, has 100 units, I don't want to have 50 units in that bank. I'll do 20 units, but I don't want 50 because I have too much concentration. I want other lenders to help shape being part of that bank. And so banks do these extra looks at co-ops and condos. Single?
Yes, so what is the ratio that a percentage the bank look at if there are, this you lending certain building for too many units? Is it a certain guideline?
Yeah, it differs from bank to bank. I don't even recall what our limit is because we normally don't hit it.
Okay.
It's normally not an issue, but
Okay.
we don't want to be above 20, 30% in a building. I don't recall the number. Alex, do you know the number? I don't recall.
Yeah. Usually not exceed 30.
Yeah, not 30%. Yeah.
Okay. So I know also in the condo questionnaire, right? The mom mentioned about the sponsor, how many units the sponsor owns and the owner occupied, right? And how many units the lenders. And what else on the questionnaire?
The financial condition.
Financial condition.
Yeah.
Okay. And we know that also it's important to realize whether the building has the litigation, right?
Yeah, those normally don't happen, but it does. It can. So the most of the situations is not an issue with the co-op, with the condo, with the financiers, but those are things that can go wrong. I'd rather you not worry about what can go wrong, because you can worry about so many things that never ever happen. But that does happen very rarely in litigation.
Very rarely. That's true, because every time that we talk about the financing contingency later, especially the first time I realized that he was also an attorney before. Okay, so then, yes, Fred is the president of Residential.
Thanks, Fred. You're wrong. I'm just, a branch manager, whatever. But my question is, when you refer to sponsor owner, so that term specifically refers to
the person who really built the building or owns the building.
That's right.
So in a co-op, it's the sponsor, the person who owns the building, converts it from stabilized rent control into a cooperative housing.
So whoever eventually become a tenant of that building become a sponsor owner.
No. Tenants are not sponsors. The person who does the initial conversion. Anyone who's a tenant is just a tenant. Because they don't have a concentration, they're going to have one unit. A sponsor can have 30, 40. If it's a 50-unit building, a sponsor can have 40 units. And only 10 get sold. And then the sponsor may not be able to sustain it.
So on average, how many sponsors?
Every co-op has to start with a sponsor. As the years go by, the sponsor's ownership gets smaller and smaller and smaller. So today, people aren't really converting to co-ops. It's very, very small, not like in the 80s and 90s. 90s was a huge boom, where Aegis people converted to co-ops. So that's not really happening. So those worries are much, we still have to look at it, but those worries are much less.
The sponsor, or we call it, for you build from ground up, and then you sell to make it a condo, right? And then you, developer, a sponsor, they decide to keep some unit. They say 100 units, and then he might want to keep 20% as a rental to himself, and as income produced, and then sell out 80 units. That's also part of the scenario. Or the older building that is a rental units there. He purchased it, and then he got it. However, there are some rent control, rent sale, like you cannot, you have to have the tenant there, and then you convert it out into a condo, and this is sponsored. I was mentioned about.
Yeah, so when it's new construction, those aren't an issue. For condos, that's not an issue. New construction.
Yeah.
I mean, you cannot let those rent control tenants to go. I mean, they can live there forever.
No, you can't force them to leave.
That's right. They can live there forever.
Yeah, some of them.
You can buy out.
Yeah.
You can buy them out.
Yeah.
But you can't force them out.
Yeah. I just have one, but this is totally not related to mortgage. Just thinking really quickly. I just have one friend in Tribeca. They have lived in Tribeca rental building for as long as way before Tribeca become Tribeca.
what are the top 5 the most expensive zip code in the country, the most expensive zip code. And so there was only 5 units in the top building, as you know how the building in Soho back on this. So the owner wanted to convert to condo, and the judge said that you need to pay the tenant all the way through they no longer live here. You know what I mean?
Right.
Equal quality. Yeah. So that's the only way. Okay. So let's talk about what type of the mortgage product is. So oftentimes we have buyers quite confused about that. That 30 years, 50 years is quite simple and straightforward, right? The fixed rate, but the loan product you explain.
Sure. So there's multiple loan products out there, and it can get confusing or difficult to digest. And so I like to keep things simple. Like I didn't go into all the details about bank statements and all that stuff in the mortgage approval process. You get a loan, your loan officer will help take you through that and get all that taken care of. The main thing you want to make sure again is credit score, having money to close, which the loan officer can help you with, and the ability to pay for the place. So the different types of mortgage products. The most common mortgage product is a 30-year fixed rate mortgage. That means that you're going to pay back the loan over 30 years, and for the entire period of the loan, the rate does not change. I mentioned that right now we're still at historical lows for interest rates. So if you get a 30-year loan now and say it's 4.75%, that rate will never change, even though the economy may go up to a 15% rate. It never changes. So that's the most common loan. Then the second one of the fixed rate is the 15-year. You can also get a 20-year. And the advantage of the 15-year loan is that you pay it back in 15 years instead of 30. So over a 30-year period, the amount of money in interest can equal the amount that you're borrowing. So if you're buying $100,000 over a 30-year period, you may pay $200,000 back, depending on the interest rate. It may be $75,000 back, or maybe $125,000 if the interest rate's high. So if you want to cut down on the interest rate that you're paying, then you can take a 15-year mortgage, which means every month your monthly payment will be higher. Some people say, well, I can't get my cash flow doesn't work that way. I know I'm going to be getting extra money, but I can't do that. What you can do is one of the questions, does loans have prepayment penalty? If these loans do not have any prepayment penalty. You never want to get a loan that has a prepayment penalty. And the standard loans never do. So you can get a 30-year loan and just make an extra payment every few months. And you'll pay it down much, much quicker, which is just great. That's what I do. I just kept paying it down quicker. It got fun. So those are the two standard fixed rate loans: a 30-year fixed, 15-year fixed, you can do a 20-year fixed. All right. Then there's something called an adjustable rate loan. This loan is generally not popular today. Because we're at historical low rates for fixed rate, people might as well just get a fixed rate loan at 4.75 or 4% if it's a 15-year. 30-year you can get 4.5 to 4.75. 15-year you can get 4 to 4.5. So, depending upon a lot of factors. So if you're going to get an adjustable rate loan, those were very popular when interest rates were high, because then you started with a low introductory rate and then it would kick up over time. Some banks offer a 1-year adjustable. Those are, I don't even see those anymore, where every year it adjusts. The more common one is a 5-1 adjustable. We offer those. It's fixed for 5 years and then it adjusts every year thereafter. Or 7 years and it adjusts every year thereafter. Now, I don't know if most people don't realize this, but the average length of a mortgage is about 7 years. So if I get a 30-year fixed or a 7-1, I say, well, my 7-1 is going to be a better investment. Statistically, you're better off with the 7-1 because you're going to be out of the mortgage within 7 to maybe 9 years because people move, things happen. Not everyone. A lot of people stay in the house. You know, my parents stayed in the house forever. So it depends on what your needs are. And so same with this 5-1 and 7-1, same like the 30, the 5 and 7-1 you can pay quicker. Yes? Yeah, it's a cap. Generally, it's a 2-year cap for every adjustment period. So in year 8, it could go up no more than 2%, and then 5 or 6% over the life of the loan. So if you're starting at 4%, and maximum can be over the life of the loan. If it's a 6% increase, would be 10%. So it's normally 6%. So 2-year caps, and then 6% lifetime cap. That's a great question. If you see anything without those caps, you stay away. But that's really standard, because that's standard in the industry. That's a year cap and then a lifetime cap. Some of the 7-1s have a 3% adjustment collar, not a 2%, because you're out there longer. Normally it's 2. Good question. All right. So I got one more product. So we got the 30-year, the fixed rate loans, 30, 20, 15. We've got the adjustables. It could be 1-year adjustable. It could be a 5 fixed 1 year, 111, or a 7 fixed 111. And those 5 and 7 could be again a 30-year or 15-year amortization period. So you pay it off quicker. And in both of those cases, you have the right to pay it off faster if you want. I'm just going to hit on it, but this is great for the elderly, the retired, and that's something called a reverse mortgage. Those products are great for certain people who are older, who have a fixed income but don't have the cash now. And I know a person who got one, and he thanked the banker, a friend of mine, saying, if I didn't get this, I don't know what I would have done. I have no reason to live. Because now he was able to get a reverse mortgage to be able to have the lifestyle that helped him through his retirement. It's actually where the bank writes you a check every month. But that's where you have to put your house up, and homeless things. But if you have any elderly people who have a house and don't have cash flow, this may be a great product for them.
Yeah, I think that's probably something our generation will need in the future, right? Because a lot of people are living like check to check. So we talk about whatever product, and Mark just explained to us about this is a.
Yeah, we got different. This was my. I put notes on mine.
I see. Okay, you see that the CEO does a great job of the preparation. Actually, the question I'm asking them right now, that I actually did give to them in advance, and I just really last minute testing the knowledge. So you cannot be a CEO without knowing all the product you have and all the knowledge. So we talk about you just mentioned there's no penalty, and the buyer also wants to know because a lot of times they're confused. So is it in New York there's no penalty, or it varies?
Yeah, there are certain types of loans that have them, but for residential loans, the rule is, I don't know if there's something out there still, but I think every residential loan does not have a prepayment penalty. There may be a certain nuance if it's a business that owns it, but I'm not aware of any residential loans with a prepayment penalty.
Right. And so can you also tell us the roughly processing timeline? This is actually usually the broker, I think there are some broker agents here in the industry, we usually will tell the customers. However, can you tell that right now what the roughly processing timeline from the application to like closing?
Yeah, so it's generally a 45 to 60. If it's a purchase or refinance, it's different. Refinances, which means where you already own the house, you just want to get some money out or buy down your interest rate, that could be a 30 to 45, 60-day period. If you're buying a house, it could be 45 to 60 to even longer period, because there's more coordination involved, there's more searches involved, coordination with the seller. So generally, 30 to 60 days is probably a good rule of thumb, maybe closer to 60-day period.
So that also leads to why usually when we represent a buyer to do the negotiation, the normal consent, the closing time is about 2 to 3 months. If you are buying in co-op condo in the city, so 2 to 3 months is pretty much what the seller would accept and for to both parties. Kelly?
Yes, I have a question. Do you lend residential loan to under LLC?
Yes.
Okay, and that's a 30 years mortgage.
Yep.
Okay, wonderful. The other
That's
second.
very good. I know some banks don't do that.
Yeah, a lot of banks don't do that. Second question I have is, because there's a lot of cash buy, particularly in the top property that you want to cash buy and refinance immediately. So in that refinance process, can you consider that the first financing or is it considered refinance?
I'm sorry.
When I purchase property $1 million in cash.
Cash.
I
Oh.
want to.
That's a refinance. That's if you already own the house, it's a refinance.
Some bank I did do that. Consider first financing. You don't do that.
No.
Okay.
That taxes apply to a lot of foreign nationals in the competitive market that they perhaps because the income or status or interest rate issue to be more competitive, so you encourage your buyer to do all cash and to win the property, and then you turn around to refi it. Right, that's a good way. So can you also provide what would be the estimate cost, roughly estimate cost when a buyer to apply for a loan? I know this is very detailed.
Yeah, this is insane. I can try.
Yeah.
All right. So I was looking at. I know that was one of your questions. Thank you for prepping me. I was looking at it ahead of time. And so you have multiple costs. You have, assuming it's a purchase. You have the lender's cost for getting the loan. It's generally points, which is origination fee. They have an application fee. There are certain fees that the lender has to pay. You have to get an appraisal. You have to get a credit report. The lender will do a flood certification to make sure the property is not in a flood zone, which is cheap. $81, I think, for that. So there's a certain group of lenders' costs that the lender charges directly, like your application fee or the origination fee. And there's certain third parties, like the appraisal fee. Buying the house, make sure that you actually get the house you're buying. And when I was practicing law, I saw a lot of nightmare stories. So you have to have title insurance, and a bank will not close. So you get to pay for title insurance for yourself, and then you pay for the bank also to have title insurance. So the bank's mortgage is secured. All right? And then, so that's that whole category of cost. And then you have these adjustments. So the bank is going to hold back, you're going to get homeowners insurance, and you're going to have to pay real estate taxes. So the bank says, we'll pay it for you. So at closing, the bank takes adjustments up front to make sure that when your next homeowner insurance bill is due, they'll have the money. So generally, if you pay for a year, then they'll just collect 1 month every out of your loan payments, and by the time the next payment is due, they'll have it. Taxes may be quarterly or semi-annually. In New York, it's quarterly for most people. And then the bank will pick 1 month of that, 1 quarter. And the bank also puts a cushion on top to make sure they have the money. So the I don't even want to say these numbers. The numbers are huge. Where did I go? So I'm estimating closing costs can be between $15,000 and $35,000. Really broad estimate. Mark, that's a big broad. Listen, I don't know if you're getting a $100,000 loan or if you're getting a $400,000 loan or $500,000. Then you have other charges are between $10,000 and $20,000. So you could really need between $25,000 and $50,000 to purchase a property, and that's not the $1 million properties. So that's something that up front the lender will give you. There's this thing called a loan estimate, and you get that within 3 days of submitting an application, and that'll give you the whole picture. It's a relatively new, been around a couple years, and that document really helps you see what you're doing and where you're going financially. I think it's a good document. It's a pain in the neck to prepare, but it gives you that full picture. So figure $30,000, $50,000 you're going to need to close. That's in addition to the down payment and paying your own lawyer to close.
So because we are almost running short on time, I want to ask Mark one really important question. I actually want to know that the commitment letter, right? So once the bank issued a commitment letter, first of all, the first question is that under what circumstance that the bank issued a commitment letter? And then once you get a commitment letter, what's the possibility for a bank to refuse to issue a loan at the closing? So we're talking two periods. From you submit an application to bank, the whole process and issue a commitment letter is a very important document. And then the second one will be to the closing. And the reason I think it's very important to mention is that we have some scenario cases, some attorney they request to have mortgage contingency. and then some request funding contingency. So can you clarify what possibility after commitment and what make commitment happen?
Sure, gladly. All right, so to get the commitment was all those things that we talked about that goes through the credit process to make sure the person can afford the house, and the house is worth what we think it is. You know, if you say that we say the house is worth $400,000 and the appraisal comes back at $300,000, the bank may not be able to loan you how much money they originally thought. So once they get all that done, then the bank issues that loan commitment, and sometimes they can issue the loan commitment. This is really important. Sometimes they issue the loan commitment quick. Like I said, it can take 7 to 10 days to get a commitment done. Well, if they issue a commitment and it says subject to this, this, and this, it may not really be that strong a commitment. And it's normal, if you're issuing a commitment within 7 to 10 days, you don't have the property appraisal back. So there is a risk that the appraisal will come in lower, and then the bank will then have to issue another offer saying that there's been a material change. We can no longer lend you $440,000. We can only lend you $390,000. Well, then where are you going to come up with that $50,000 more? So that's important that the property come in appraised. The property is in good condition. It's going to have a better chance of being appraised. The property has termites that needs $1 million worth of repairs. It's not going to come out where we thought it was. All right, so that's one. And then once those things get
Extremely rare.
extremely, extremely rare. The only time that would happen so if the borrower between issuing commitment gets arrested and goes to jail and no longer has a job, the bank's not going to make that. The bank's not going to make this. It should just dramatically change the situation. Those are extremely rare.
Underlying guideline change. So how about those two? Like, what kind of possibility that will happen?
So I want to
Really, really crazy from 2004 to, I would say, 2016
last year. We know our market right now is quite healthy,
slow pace.
so everybody rushed to compete and for the property, and then bank issue commitment really fast.
But now I think we are at a really good path right now. The commitment and the bank actually verify the buyer what Mark mentioned.
And then if everything is
quite trivial.
Contingencies are trivial. Sorry, forgot how to speak. Sometimes they're trivial, like an insurance policy. Sometimes it's subject to, like I said, the appraisal or subject to financials of the cooperative housing. I think you mentioned something about a survey. Is that right? So a survey, that's all in the title policy. So if you're buying a house from someone else, or if it's brand new construction, surveys, I've never seen a problem with a survey or lien on title with new construction. I've seen a title. Those problems are also very minor, and that's where if you're buying a house, you need an attorney to help get you make sure the bank's protecting the bank, and so you need to buy a house, you need to protect yourself with an attorney. If you're refinancing, things are out of the way. If you're refinancing, you're going to know if you put an illegal addition onto your home. And if you did, well, then shame on you. But if you're buying, you may not know that addition is illegal, and that's where the title company helps to come in and help protect you and protect the bank. So most
bring them a lot of anxiety. Can you explain the bridge loan? Do you have a bridge loan in the bank?
Yeah, we do. So the person getting the bridge loan has to be able to show two things. One, the most important is that they can carry it during the bridge period. They have to have the financial wherewithal to carry it during the bridge period. The second, okay, I got one other thing I want to mention about loans. This is all right. So you got a financial wherewithal to carry it during the bridge period. The second is clarity on when the bridge period will end. There's got to be clarity. If it says, well, we don't have a certificate of occupancy, so I can't do something else, but I can't. Those don't fly because it's too uncertain. The lender cannot get caught into a 3-year bridge loan. That's not a bridge loan. 3 month, okay.
3 months.
Yeah. All right. You're not going to build up financial wealth.
So we have material the bank is looking at.
Okay. So commercial property, there are multiple categories of those. It's where it's primarily used for commercial use, or where it's residential use of 5 or more units. So 5 or more units is considered an apartment building, multifamily they call it. Or a commercial use could be a salon, it could be a print. Restaurant or pharmacy on the first floor, and then apartments above. And those are all different types of commercial loans.
What about if somebody buying a 2-family house, then if you live downstairs and then rent out upstairs, or vice versa, it's considered commercial?
Residential.
Residential, okay.
1 to 4.
Okay, 1 to 4 residential.
Great question. So, in a 1 to 4, in a 2 to 4, you're looking at income flow. So it's still cash flow, cash flow, cash flow. Banks want to make sure that you can pay them. The long-term reliability of the cash flow from that building. They also spend even more time. We look at the character of the borrower. Credit score is an indication of character, your ability to manage your debts, or my ability to manage my debts. Well, in commercial property, there's much, much more of the individual. Is this your first building, or have you been doing this for 20 years? What type of infrastructure are much easier to get their loan approved. And we don't just say, oh, well, the person's worth $20 million. Well, they get worth $20 million because they got it from a lottery and they've never run a commercial property. Not anymore. We used to bank vacant land. We used to do constructions. When I was working at a bank up in Harlem, we did a vacant land, and we let them. They were going to build this big building. They spent $1 million building the infrastructure into the ground, and then they went belly up. So now we lent them $1 million or $800,000, and it went into footings, and now it's just grass. Yeah. So you can really get hurt on those properties. So we don't do those at this time.
The reason I talk about vacant land, I don't want to use this opportunity for selfish reasons. I didn't bring up one huge parcel of land in upstate New York, 50 miles from New York City. They are residential use. You can build on your single family house. for $10 million only, 535 acres.
Oh, that's wonderful. Yeah.
It is, yeah.
50 miles. Wow.
Yeah, so if you have some cash,
10 million.
yeah, come to me. So, anybody have more question, whether it's residential or commercial? Because today I really, background more for this very, very detailed one-on-one question, but that if you have something that much different question, feel free to ask. Yeah, Fred?
Do you loan to non-resident and foreign nationals?
Not yet. We will be able to do that either later this year or next year, which I'm just. That's something I've wanted my entire 5 years here and have not been able to get it going, but I'm pretty confident we're going to get it going next year.
Okay.
Thank you for asking.
Yeah.
Another important question would be the commercial concentration. That's pretty important in terms of the building. So whenever buyers are looking for the property in terms
like condo, co-operating downstairs, we have the retail space, right? Commercial, yeah. So is it better to have a bigger commercial percentage or less?
it's important to have like
If I can add. So, thank you, Alex. The idea is that residential. Of a bigger pie. Commercial property is much more risky. So if a commercial property is 20% of the building and 20 or 30% of the income comes from that commercial property, if they go out of business, until they can find someone else. So that's why you keep it smaller rather than letting it overwhelm, because otherwise it could overwhelm the individuals living there.
But now New York City and Miami too, that has a lot of hotels.
Really nice.
Yeah, hotel condos.
You need a specialty lender who understands hotels, because you've got to really understand. Handle the payments if the hotel goes under. It's a totally different analysis, very complex.
yeah, those are harder for sure.
Yeah, it's become popular though. It's become more.
The most famous hotel condo is David was our Tanzania exchange expert. Guy, you might meet David. He was our first speaker. First time buyer or refi or whatever, buyers shop around and they shop around on the rate. What happened and can they, what can they do?
Yeah. So rate locks are. Whole other story. So So the general rule is that the amount goes along. And so if you have to pay for a rate lock, and it protects you for that period. And then if you go beyond that, then you have to pay every day you go beyond it. So rate locks are tricky. If you're getting close to the end, you can do a 15-day rate lock, a 30-day. You get the closing within 15 days, then they got penalties. So the normal rate lock tends to be the 30. What people gravitate to is the 30-day, and you just hang in there, try to get everything processed, and then get to. The thing about it's a teamwork approach. Banks, I mentioned about 7 to 10 days to approve your loan. That's not that hard if you have the file. The borrowers to understand what they need to do, which again comes from a good loan officer. The loan officer's got to be better than the borrower at the profession. Borrowers don't do this all the time, so the loan officer should be guiding the borrower, saying, okay, you need to do this. They may force you, and we've seen that happen at our bank. It happens where they don't close in time of the rate lock because the seller is.
Or is there anything in the loan cost that we can negotiate?
No. That may charge you more up front and then negotiate, and you still end up more expensive than us. Yeah, so.
So, yeah,
we
you mentioned that.
do want. It's $450 or $400.
We take most of the applications.
Yeah, most I think it's now. I can't remember.
Application fee is $500.
No,
So last question, speaking of relationship.
She's good.
Yeah.
That's Kelly.
So is it yes or true? Yes equal to true.
It depends upon what the person. No, it's not true.
Mark, his voice already become like losing it, and I also knew. So any questions that we? So this reminds me of there's once I went to see a play, and the entire play it ended up just me being the audience. So, but these people continue to finish the entire play, and that I admire. So basically, what I meant to say is that I appreciate you, RSVP, and you also attend, because as we know that every time when you throw an event, it has it involves a lot of effort behind, and a lot of people RSVP and don't show up.
Yeah.
you know what I'm gonna do. I'm just kidding.
Okay, so we're going to enter a 5-minute break, and if you have any question, feel free to ask Mark.
Or we've got a whole group of FAIB people here. Why don't you guys all want to introduce everybody? Raise your hands, FAIB. A lot of people like, oh, FAIB. It's a great group of people. See, this is why I'm so happy, because I'm blessed with these people. So thank you guys very much.
Yeah, thank you so much for the support, and coming here.
We even have HR who's recruiting.
Okay, so we feel free to enjoy. You have 5 minutes break, and I'm going to talk about insurance. That
Thank you. Thank you, Annie.
Thank you so much.
Thank you.
Take 5, right?
Yeah.
Take 5. 4, 3, 2, 1. Oh, yeah. No, I wasn't going to complain yet. I want to make sure I had all this stuff too. Oh, that's okay. That's what it says. Yeah, no, that's fine. Oh, yes. Yeah, it's fine. It's fine. My pleasure.
Well, thank you. Thank you for the time. I'm very interested.
Oh, really?
Because, I'm an investor.
Maybe 2 more minutes, then we can enter the insurance session. Exciting insurance session.
So every month in our seminar, we target for small size kind of seminar, just so we can have better interaction
With each other. So each time we look for the venue that's about 50 people. And then we have like almost 50 people RSVP. But I appreciate your presence here. And our seminar is always open to everybody. Doesn't matter whether you are even on a broker, doesn't matter whether you are a buyer, seller, or industry colleague, a professional, everybody's welcome. And so even in the industry for 16 years, I still consider by myself that learning new knowledge. So right here we're going to enter the insurance session with Aegis, Aegis 保险, the CEO, the handsome CEO, Ivan. Everybody knows about Ivan. You know what I mean?
What does that mean?
Turn on the TV, you will see Ivan. Miss Kelly. Miss Kelly. And they have. So I don't intend to combine everybody in the Asian in this world, but they do have a great market share, and pretty much if you want. Okay, so Ivan, can you talk about your company?
In a very little short way. It says Mark helps you make everyday active stage, so to speak. Okay, and then come back. Okay. To contractor, developer, we do them all. We don't really have a choice, so we basically provide all types. The landlords. So if you ever get into that situation,
That as mentioned, Aegis Insurance Company is a full-service insurance company. But today we're going to focus on property only, that from residential and commercial. But clearly, every time we talk about commercial and residential, most people, everybody's involved in residential. Doesn't matter where you live. But really, very few people really like the commercial area. So we're going to talk about residential first. So can you tell us in residential, right, that how many kinds of insurance for residential property?
okay, well, besides co-op condo, house, you also have vacant land, which that he doesn't borrow, but we have to cover it. Vacant land or rental things, they're all considered personal insurance, as long as the name is under a personal name, individual name. In other words, if Ann and I were going to buy a house together, we said, well, let's make an LLC. That become commercial, okay? And the rule of thumb, just like Mark has said, that anything over 4 families is commercial. It could be under my name, just like that, okay? And often we work with the bankers a lot, because normally when you find your dream house, you want to know the loan really quick. Am I able to get a loan? What's my point? This and that. But they really don't think about insurance until the last minute. Okay, I mean that is a piece of paper you need in order to close. Okay, why would you need insurance? After all, the house is really not yours until you really pay it off. Right? Think about it. So for you, or also for the bank, you want to make sure you protect your most important asset. So that's why a lot of times require. Can I ask you this question real quick? If the state of New York does not require you to have a insurance to drive, how many are you would not buy insurance? My daughter feels the same way. Normally, the younger you are, you feel you're invisible, okay? So you're not happen to you. But you think about it. If you're like me or like everybody else, what if somebody didn't hit you, but you hit someone? Just on the way here, there was a biker while he was a delivery kid. He just hit me, and luckily that I had a witness that I begged her, would you be my witness? I'll be really sweet to you. It's an older lady. She was very nice, but that is very important. So one question I want to tell you is this. When Mark loaned you $1 million for your home, okay, it's exactly a home. Let's say I don't have any money. Well, my income is not like hers. So what happens? I borrow $1 million from Mark. It's exactly the same house. She only borrowed $500,000. So the bank asked me to get insurance for $1 million. She had the same house, exact same house. She only had to fund $500,000. Right there, we're talking about $1,000 difference on insurance costs. So normally, with a broker like us, we will call the banks. Listen, I understand that you loan me $1 million, but what if I give you 100% replacement value? Meaning that it doesn't matter, as long as that house is burned down, that the insurance company will put it back to whole. That's all they're really concerned with. So why do we need brokers? Because broker will understand these type of things. Okay, now broker represent clients. Agents represent insurance companies. No, we are broker and agents, meaning that in some cases we have direct appointments, we're able to issue the policy or ID cards, certificate insurance, things like that. And sometimes we don't. We have to go through another wholesaler, so I become broker. Okay, but most of the time with guys like us, when there's this litigation, we have to be on client's side. Okay, what's my question? Sorry.
So most of the time, Ivan mentioned something is really important. A lot of times the buyer have no idea they need to have the insurance until that before the closing, and they will say, "Hey, can you tell me that what insurance what I should get? Because the bank requires me to do. But why do I need to get my own homeowner insurance? We live in New York City. We live in a product called condo. We understand, but a lot of the time, our first time.
To my door, this is my unit. I close that door, that becomes my responsibility. Meaning that if there's a fire occur, okay, that you caused it yourself, your own negligence, the condo board, your insurance will probably cover you exterior, meaning like your windows, okay, or maybe some standard item. Let's say from the beginning of the condo, the building, they're going to give you some appliances, things like that. But any upgrade, if you have a better tile, a better a cabinet, things like that, they will not pay for that. Or the most time people buy, they're concerned about liabilities. If you have well, you would have a barbecue in the condo, but I just thought, yes, if you have a barbecue in your rooftop condo and then someone get hurt, kids, stuff like that, what happens? Okay, now. But then what happens? Your insurance company, the insurance usually will give you a guest medical, say $500 or $1,000. But remember, you have a liability and property, so anything more than that, you're going to tell Ann, can you sue me? Because if you sue me, you're going to get that money. It takes a litigation. However, insurance does not willingly just pay you. Okay, and for banks, because like I said, what is the chance for someone to come home that the house burned down, they can still pay the mortgage? I bet zero. Just like with the subprime, they don't pay. Same way. Because if you don't have a home, why would you want to pay that mortgage? So it is.
This very quick question I want to ask the bank.
So in the scenario when the house is burned down, our unit is burned down, right?
It's not warrantable. Do the buyers still have to pay the mortgage?
As wall in or wall out. Master would be wall out, everything on the exterior, and then the condo, the HO6 would be wall in, anything from the inside going.
Need to do that, okay?
Yeah.
But the only thing is, also another thing is, how do you make sure your insurance is up to basic, okay? It's wind, hail, lightning, explosion, also vandalism, okay? That's why those are the very basic. But imagine those are not really common. Who's going to follow up on your flying object that coming to you? Well, if you happen, you pay, of course. However, what most people are concerned is really is fire, wind, hail, and lightning, things like that. However, the insurance company got really tricky because these couple of years, everybody talked about, well, not just these couple of the past 10 years, our ocean is racing up. So the FEMA is redrawing the line. In other words, your insurance could be $2,000 before, let's say you have a home. All of a sudden, because you're close to the water, they raise you up. They're going to review that law this year, okay? And also, a lot of people would think, if my house got blown away by a wind, you'll be paid. It was like that before, but it's not anymore. What happens is they have a lot of exclusion. For instance, if a tropical storm became a hurricane, you know how we became that? The National Weather Service will say, according to the speed, they give a name. That's why you have names like Island, Sandy, whatever. Actually, Sandy was not a hurricane when they landed in New York. Okay, but anyway, the reason I'm not telling you that the insurance will have a clause that says if your home damaged by wind, we'll cover that as soon as you pay your deductible, okay, $500 or $1,000. But if it become a hurricane, normally it's 2 or 5% of your home's value, which is a lot of money. So you need to look at it. And sometimes you can buy it back, just like you buy your points. Can I buy this exclusion back? You can do that. But just not a lot of people are very common with that. But when that happens, if your home is $500,000, which is very easy to worth $500,000, and the 2% of that, 10% is $10,000. So those are things that you need to know, okay?
So I have a question. If we talk about the wind and lightning, what else?
Vendor.
The vendor,
people
okay.
comes in, or
does it apply to the co-op condo?
Yes.
The common building here?
Yes,
yeah?
it does. Yeah, that's a very basic of that.
Okay.
Yes.
So in the homeowner insurance and the co-op condo, right? And what others said, you talk about replacement cost, right? Usually, what do most people, for the one-bedroom apartment, this year cost about $1 million, which is very easy in Manhattan. The buyers, a lot of times the buyers just say, I just want a minimum. They try to
in Battery Park, okay? What I will do, I will assess a personal property. That's what that is. However, now, let's say you have a theft at home, you come in. Do you have any special jewelry or some arts, whatever? Those we call a floater. Okay, floater means they're not in your. Usually a homeowner is a package policy, meaning liability and property. Property like what we're talking about, my rod, my TV, my ring, all those things that are going. Okay, or by my policy. You could add theft in it. In other words, if you have a Armani suit or something in your trunk, you went out to 93 Bowery and you come out, your suit's gone, and that will cover you.
building be done to your ceiling, right? That we can file claim for the insurance. What about This doesn't happen to my toilet is leaking.
Okay. Well, that is a warranty issue. That is not a. I went to the restaurant and I come out. I got beat up. What happened? Cost of loss. I got beat up because I was looking at Queen. If it's weather related, like that. In other words, if you have a home that is lack of maintenance, okay, and you filed a claim. Turn the heat on. Oh, yes, I did. Oh, really? Well, let me see your bill. If your bill, you don't have any oil, your bill don't pay you. Okay. I want to get into that. Well, the reason I tell you that is because in our community, when it comes to Chinese divorce, okay, they will negotiate with you after that they're paying. You know? But the point is the just get a piece of paper for the requirements, okay? Or like I said, bank or maybe your lender have different requirements, but you may want something more than that, okay? For instance, if you call Geico, which she did, and it was better price than mine, 15 minutes. Katrina hit New Orleans. It wiped out all state. They went up. They don't cover anymore for a couple of years until they recruit. So it's every time when the policy is due, you will get 60 days notice. Then you should always ask your broker, this is the best price out there. Is there anything else? Yeah. I'm sorry.
Yes. So do they need a special insurance because
Yes.
they're running as
Airbnb, you're gonna have a hard time to find a good true coverage. Okay, I was gonna get into that. That many home insurance homeowner buyers, home insurance, they'll come to me and they'll ask me. The answer I got is like this. Well, most of you have life insurance, right? I don't know if you do that, but anyway, if you have a life insurance, they're going to ask you, do you smoke or not? Well, it doesn't work that way, insurance, because you could say, of course, well, Ivan, so what's more expensive? You know, I actually live in Shanghai, but I bought this home here. You know, I said, I tell you what, if you will make sure. See, insurance, you have to prove to them, I'm innocent. Bill, they look at your mail, they'll know these things. Okay, or even vacant. Vacant house is the most one. You pay more premium, and you also it's more. By the time you call 911, that's probably 60% burned out. Okay, so for you to buy a home, all this is important. Where's the nearest fire station? Well, in New York, we're in the city, so you don't worry about that. But I actually try to cover a temple. I cannot find anybody covered it because the whole thing is would. The nearest fire station is 10 miles away. Okay, so all that it makes.
Ask a question about water backup. I think that's an endorsement you have to add, right?
That's right. Water backup is not a standard on the policy, but you know we're commission driven, right? Okay, so. What is not covered? So this way you know, because you assume everything's covered until.
You know, a tenant when the insurance company asked him if he has a pet, he said.
Of course not, because that's
See, that's not honest.
You would need certain dog. Okay, in other words,
and also the type of dog.
Yeah, of course. If you have a Shih Tzu, you know I have 6 dogs, but they're little dogs. They're Yorkies. Okay, they're my wife's kids. They're not my kids. But anyway. A year.
$800 a year.
Yeah, it's not that cheap, but yeah. But if you have a dog that does that, you should. It's like
Pet insurance, yes.
Kennel. Do that. Well, some cat does, but I'm saying normally kennel dogs. Yeah.
Do most rental insurance. So one question. I haven't.
I'm everywhere. I know.
I know. It's everywhere. Where were you before this seminar?
To have it. You know, we're in the city that the law is really leaning more on renters. If you ever have a renter that don't pay you, you want to get them out, you know, it takes a year. Okay, but more than 6 months, that's for sure. Okay, so you want to make sure on your lease you require the tenant to have a renter insurance. I mean, think about it. And my furniture is damaged. Do you think I want to pay the rent? I don't think so. That gives me a great excuse or reason. Say, you get a lawyer, write me a letter, $100 before you pay. A $90 to $200 policy a year. That buys you peace of mind. Because with that, if you're a landlord, you're fine. Also, if you're a renter, you're protected.
I just want.
And a lot of people, when they purchase the property, they tell the bank that it's for their rate.
Right. Same way. They tell
Exactly. And so when they intentionally they want to rent it out, or maybe they just accidentally to purchase homeowner insurance because they didn't really. That when you rent it out, the bank, the insurance will not cover, which would, I forgot to ask more about the fraud thing, but it's another story. So for the renter insurance, we always repeat again because I really first had to deal with this. That is 3 bedroom, the renter pays $16,000 a month. And then hurricane came, and the wind, the water slipped through the wall, and it damaged one foot of a quarter of the space.
Wow.
Right. So it takes about 6 months also to between the building, the architect, and insurance to get it fixed. So the end result is what happened. the renter, they get their the landlords, they get a rent payment, but we do the proportion. But this is not like by law, it depends on how you list and negotiate. But we did get the reimbursement from the insurance company from the landlord perspective. But renter, they also get from the renter insurance, right? So everybody is covered. That's really important. So here we come to the question here. In the case where the homeowner
surprised that they declined their claim. Yes. Okay. So it's very important to let your insurance company know what you're doing. For instance, a lot of people just say, hey, let's add another bedroom. You based on you were living there not under construction, so they were not paying. Okay.
So in this situation, originally they were intend to live there. Maybe they did live there for 5 years. Afterward, they move out, they rented it out. So for the bank purpose, they still, because the mortgage is fixed, right, 30 years. So we're not going to tell the bank. But for your insurance, we have to tell you we are.
So if nothing happened, in other words, if you rent to somebody, you didn't tell us, we didn't know, nothing happened, so everybody happy. It's just like, if you don't, Mark, I just got this loan from you, but I'm gonna rent it out. He's gonna call the loan back. Basically, I think. I mean, he should call the loan back. Will he or not? I don't know. But for insurance fund, you don't tell me, I don't care. I think the
thing is, at that point, do you have obligation to tell the bank that property become a?
I don't have the obligation.
You don't have obligation.
I don't volunteer information. It's like this. Okay, if you call Geico, right? Actually, you drive to work. Yeah, I drove to work every day. Man, I gotta go through East New York, the pothole. Why do you want to tell them that? You say, no, I take a train. Tell you how to save some money on it. Think about it. It is my choice. I can take a train or drive, right? So why should I tell Geico that I drive every day? I went through East New York, bad neighborhood. It's not necessary. Get a hold of myself. Okay, fine. Thank you. I'm sorry. Any questions? Yes.
There's a pretty wide array of insurance carriers and a pretty far. Well, I wanted you to kind of explain to everybody else, because insurance is insurance. Is one carrier the same as another? Is this $35 policy a month the same as this $100 policy a month?
Yeah. Okay. Possible. That's what we shine. The guy has just has a meter. You put on your not bad. So not bad. 30%. It's going to be mold in there. Mold. They don't want to hear that mold word. So they say, okay, fine. For ourselves, we're not trained to do that. Even me, I've seen so many claims, but still, I use that gentleman. It's not the money, because I want to make sure that when it comes to claim, that's what you're buying for anyway, that I can.
But is the insurance company and the adjuster?
The insurance company and you adjust against each other.
So you should get your property adjuster rather than the insurance and the adjuster?
That's right. Always. That's just a tip, because like I said, the insurance don't want to pay you. You say my roof's leaking. Now he comes and he saw the roof leaking, but he saw there's some other damage. You think he'll tell you, oh, there's another one. No, I don't.
So can you tell everybody that when something happened, an accident happened?
But it makes difference. I'm sorry, I didn't answer your question. I'm sorry.
Yeah.
It does make a lot of difference. And also like a Chubb. You ever heard of Chubb?
You were very high
Chubb is a great insurance company. Do you know that a lot of people work at home today, right? Realtors, whatever, work at home. What if you get hurt at home? Of course, it's not going to cover you. But if I work at home, Chubb, it gives you a workman's comp. So there are different, really. You know, it'll be like, is all banks the same? No, you charge $500, you stay for your fee. I charge $14.99 on my bank. I'm just saying they're all different.
Yeah.
You got to shop. That's the way it is. Because we shop too.
So there's tons of insurance.
Yes.
And you see a couple names keep popping up, and you see their pricing is so different than like all. There's a difference. And so I talked to my insurance people, and they're like, yeah, there's a difference.
Well, there's a difference
between. They might not even cover
yeah.
this. Like that company might be gone in 5 years.
You know. Also, it's like the insurance company has different appetite. Okay, for instance, you. Okay, I gave her a quote from Progressive. Okay, and I told my guys, this is one of my friends. Okay, give her all the credit there is. And I think she went to Geico because I said, look, man, we're friends. You go shop, whatever. Geico we can do. And I think it was $1,000 difference per year, or maybe $2,000.
Okay. On the annual premium, it's about $3,000 difference.
But the coverage is the same.
On the
I didn't see the coverage, but I'm pretty sure it's it. But I'll tell you why. Okay, insurance has an appetite. Let's just say, did you know that workers' comp? There's some company when they see Chinese names, they claims. Chinese people are very rare file claims. You know, did you know that workers' comp was filed most on Monday because they got hurt at home? They wait till you go to work. Say, I got hurt, so hopefully that coverage will pay for them. But we're not like that. We bargain, but we don't claim.
Okay, so I have really one question to ask. So when something happens in your home, this is the stealing thing, right? So what should we do in order to file the claim? Should we take pictures and then wait for the insurance company to send somebody and leave the way it is? Or should we just process to remedy the situation first? Because go back to you just mentioned earlier that we have a case where the insurance company was really, really bad.
Yeah.
I would never reach the person. And in the end, I just have to pay for it.
First of all, you make a claim, okay? And then you ask your insurance company, do you have someone able to come look at the house right away? If they say, no, I'm sorry, we use a third party, we're going to handle it, blah, 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 like this, then you go ahead and do it yourself, okay? Of course, you need some money sometimes. That's the reason that I use. And he'll put out the money. Well, he'll read your policy first. You know it's covered because he knows he'll put you in a 5-star hotel. He'll do that. And then it's my job to call the insurance company. You're going to settle this claim. That's fine. They're living $500 a day. How many days you want them to stay there? So you got to give them some pressure. You have to. Unfortunately, it's not 1 + 1 = 2. You know, we all in the business. We know it's not that way. So, yeah. But what you want to have all the documents, okay? And you want to do whatever you can to prevent that damage further.
So I have a question. So what's your advice or recommendation to the home buyers, renters, or owners to consider any properties near the flood zone? For instance, after Hurricane Sandy, that a lot of insurance
My advice when you're buying a home, okay, two steps. One, when you're looking at a property, of course, to know what's my point, what's my rate, but you don't know what the flood insurance. It could be. We have homes at Sands Point, Long Island, North Sound. They're over $10,000 flood insurance.
The what? I'm sorry?
They're over $10,000 on flood insurance per year.
Can you issue that? I thought.
Over that.
Right.
But I'm saying you really need to know that because we have people that the last minute they realize, my God, that's $8,000 a
So,
year.
for example,
Yeah.
if you purchase in Battery Park City or Staten Island, right, Battery Park City, the buyer needs to buy
The banks, well, we need our 16th floor. He's
You have
flood insurance.
flood insurance.
Sometimes
We're going to be dead.
No.
We're all going to be gone. There's no banks.
Required free
Yeah.
premium.
Required.
you
Yeah.
require.
But no.
But like even
But you require the master.
Yeah,
Don't
but
you?
even there, sometimes they don't cover it because like. The right monetary amount for enough easement.
Exactly. So that's each different banks have different exactly. But sometimes I will call the bank and ask them. I say, listen, you asked for $1 million property, but this home, you pay $1 million for the home.
If it's a co-op or condo that's 16 stories up, I made the same argument. Hey, a flood hits there, we're all gone, right?
Well, you have to understand. So that's the reason sometimes we call the bank or if it's 100%, because everything is not just cut and dry. Okay,
it's not.
If you talk to them, they probably would.
Yes.
Probably
And
would
even
not.
being in the middle of water, like in Flushing, there's Skyview.
Sure.
The second one in the back, it's literally in Will Pond's Lake, right?
That's right.
It's like in the middle of
yes.
Even being there, you would need. In this flood area, my elevation is X. There's no way this stuff is going to hit me, so they would reduce your range in terms of what you're required to have.
See, that's good, right? You got an actual experience. You do. You can talk to them, or you can talk them into something.
Yes.
Yeah. Also, if you find a home that's close to water. The owner or show me his policy. You can take out the name. I just want to know this address. Or you can even call any insurance company and say, can you do a check on this address? See any previous loss before. But we can run a pre-check, okay, as we know. Every time it rains, it floods. It's just very low. So,
we talk about, I tend to focus on the co-op condo because it's in New York City, but we talk about insurance coverage. It's really required by the bank to have better coverage. So if I want to buy a single family house, what would you recommend a buyer should purchase including the policy?
okay. On a single house, there's one pipe that is a sewer pipe that from your property, normally on your sidewalk, to center of that street, that nobody covers except EPA. Okay, you can call EPA. They actually set up almost like a FEMA type of service. Okay, it's a $200 policy, but that right there for older home, especially Long Island, if you have a single, like a single family, you have trees, right? Somebody asked me about toilet, but anyway, but there are home warranty company which I use myself. They'll come in, clean for you, clean the root that goes to that. $200 normally. Besides that, okay, I will make sure on a single family home that make sure your tree they have to pay for themselves. Yeah. So a lot of times, if you have a home, you have more concern. And also, if you have swimming pool, okay, that normally is more money. If you have it freeze the whole winter until spring. There's somebody else's home. They didn't know. So yeah. But right there, like that, normally in the north. That's detail. And what else? Also seasonal homes. Okay. Oh, not seasonal homes. You asked about Airbnb. You asked about. But when you say rental property, what happens? How do they justify your rate? They not just cover the property itself. They will actually give you a loss. Finish paying at least for you. Okay.
I paid like over $1,700 for the house upstairs for only one reason, that some. But we do have, like, the reason I really want to include commercial property, we do have a lot of clients, they are looking for mixed use type property. But I don't know, we just get the open session that anybody have any insurance question to ask. If not for residential.
If I want to add to this, because I have a lot of Chinese landlords, because I'm in Flushing, okay, a lot of Chinese landlords that they actually have maybe a 10, 15 union of commercial space. They rent out to the clients, but they never require them to buy insurance. Okay, so and then all that liability fall on yourself, so you pay a lot of money. Okay, and then so he started require all the tenant buying that, but then he said, how do I know if they cancel that policy? Is that a good question, right? Ask me that. Okay. So what happened is there's a difference between additional insure and there's an additional interest. Okay. Now additional insure meaning anytime if your policy has additional insure in it, that means the insurance company, when they pay you the check, has two names. Okay? In other words, if she's my landlord, it's two names. So what happens? I can't deposit, she can't deposit. So you have to make an agreement what happens. This way they want to know, it's like if you have a mortgagee, the check is going to be made out Chinese American
So the
bank.
rental insurance you have the owner, landlord's name on it? Is that what you're saying?
No, because the landlord is not additional insured. You don't cover it, but he's an additional interest. Okay. Interest meaning that if he cancels policy, I will get a notice.
Right.
That's what that is, only. So you want additional interest.
So we want to make sure the tenant gets the tenant insurance that have owner's interest on it.
That's right. So this way.
Not additional insurance.
Yeah, you want to make sure it's just not a piece of paper. The paper we can type.
Right.
Right? You don't know the policy, so you want to say, you want to make sure that it says additional interest, your name, this and that.
So we need to put that on the lease, right?
You should, of course, yeah.
I mean, on the lease they need rental insurance, but we didn't say we need our owners as additional interest. So that needs to be.
Yeah, you're adding the owner as additional interest. You want to ask for additional insurance, but not every insurance company will give you.
But will that be more expensive for the tenant?
Yes. Well, a homeowner, no.
No.
Commercial, yes. It's normally $100.
For the tenant.
Yeah. For instance, does everybody know this building, Greenland? Greenland's a building, right?
Yeah.
550 Vanderbilt, right? Okay. Now, what they require, they want additional insure for the sponsor unit, the board. They want three. And the insurance company says, this is a $400 policy. Let me cover so many people. No way. So I said, what about additional interest? So I had to explain, and the lawyer understands.
So actually, this is something new I myself to learn. So additional insurer, that means that
加保人. I add in this gentleman and this woman.
But additional interest, it just seems like a notice.
That's right. Make sure he gets the notice.
I always have the other way around.
Yeah. No, because a lot of times insurance companies say, I refuse to add another party into that. But if you, what do you consider? What if you don't pay? I wouldn't know.
Okay.
Right? You cannot check every day, right? So.
But additional insurer means that I can also get a compensation reimbursement.
Oh yeah. For instance, I'll tell you, if I go into this in your building and I got hurt in the lobby, right? I tripped and fall somebody, who am I gonna? I can, okay? That's why, in other words,
your home. Now the property management company always want you to add the owners as insured, additional insurer besides the contractor themselves, and then property management as additional insurer, and then core account as additional insurer. And now I learned to be smart. I manage property. I always ask them to add Jade Stone as additional insurer.
Yeah. It's very common.
Okay. So anybody have any more questions?
Any other questions? Because I'm not going to touch up on commercial because it's just too broad.
Yeah.
Okay? But I do want to tell you on the homeowner things. Normally, yeah, you really want to look at the policy. Look at the policy premium. Right? I don't know if you ever do that. So we have a lot of argument with the customers. But why can you give me a pay receipt? I said, because it's not paid. Once I pay, I can give you a number. You're not paid yet. Because if I don't pay, I cannot close it. So chicken or eggs first? Which one? Okay. What happens? A broker, we can issue you a further date. Like today, if today's 18th, today's 18th. I can be closing, say August 31st. I can make that effective August 31st. Okay, so there should be no problem. Or we'll ask the client to pay first. Okay, because normally if you don't pay, I really can't. There's no number here. Pay first. If you somehow whatever you can close it, you get 100% refund anyway on homeowners.
Yeah. So. Right?
Yeah, quick question, because you've been in this for so many years, you probably know these different carriers very well.
Some. I don't know all, but some.
I know, but you have your own, favorites probably. So comparing those, like all those big names, Allstate, State Farm, Farmers, Progressive, whatever, Travelers. What are the major differences? Now, if, for example, most people either rent a apartment or they own a home, house. So obviously you have your preference. Okay, if you own a property or private house, probably farmers is better. Or renters, I think maybe progressive. That's your experience.
I don't think. Can you make a kind of comparison?
Well, I can only tell you my experience. Okay, I tell you. For instance, progressive renter insurance or home or auto, just like Geico, they pay you right away. They have their own people. In other words, if you have a damage, like an auto, you say, come to my shop, they look at it, write you a check right away. Okay, so that's good. As far as a homeowner, I found some of the local companies. Okay, have you ever heard of it? One called Oseco Mutual. Most of them you probably never heard. They're 3-year policy. That means they're 3 years, they will not increase.
Kingstone?
Kingstone are good, but the Kingstone, they're very conservative. They don't cover a lot of other things. The water backup is something you need to add. It's not standard. It's a $35. Okay, Traveler is good. They're expensive. You know what I mean? So a lot of times we'll tell our clients, listen, I can give you a better policy. Okay, they're going to be more money, but some people is just very value concerned. But I tell you, if you ever, like I had a claim before. I actually come home my house. I see fire truck. I said, oh, I really don't go to my house, But years ago, so I believe in that. I believe in that. But then these kind of things, we're salespeople. We don't want you to feel like we oversold you. So I will give you a couple of choices. I shop a carrier, this is what we have. We only shop the people that we know they're gonna pay. There's a company called Countrywide Insurance for auto. Okay, especially for newcomers, they're very cheap. I don't want to carry them because I know every day I'll be arguing with them. Can you imagine I sell you a policy, you have something happen that it doesn't cover? You're gonna call me, right? And I don't want to deal with it. That's why we don't want to. But you're right. Each company is they're all over different. Definitely are.
Any more questions? Okay, great. So I just want to, among our guests, there are various professionals. We have agents and we have life insurance, right? Life insurance. And then we all have the 1031 exchange. David is right there. And if you have agents, the buyer, you want to do an exchange program, that this is a very unique area, specialty area that you need to have knowledge with. So feel free to reach out to David as well. And anybody else who would like to introduce yourself in profession, just so everybody can benefit from the resource here, we get together. No? It's a free.
Come on, Kelly.
Yeah, it's a free chance to connect. Hi, David. Can you just David? Okay, here's David. Do you have your business card?
I do.
Yeah, David is our 1031 expert. Because in New York, we know that pretty much you meet all kinds of professionals. Yeah. Yeah, so we are, if you don't have any further questions, we're going to just wrap up. Even though the and even 16 years in the industry, I am still learning. Like tonight, I learned two.